would like to extend a warm welcome to our very special guest, Mr. Keyur Doshi. Good evening, sir.
Good evening.
Yeah. Who is the CFO of FINCARE Small Finance Bank and also a promoter, co-founder of Disha Microfinance, now FINCARE Small Finance Bank. He has over 27 years of experience in the financial services sector, managing finance and accounts, treasury, fundraising, financial planning and analysis, cost management, business planning, strategies, as well as audit and compliance, and the list goes on. Prior to setting up Disha Microfinance, he was running a successful financial products distribution business for about 12 years and also worked for a year in the area of leasing and hire purchase.
Thank you, Harit. Thank you for warm welcome. And it's my pleasure to be here at the platform and talk about FinCare. It's not a company, it's a bank. So I guess it's a first disclaimer that's a FinCare Small Finance Bank, and it's slightly different than the regular entities. And the other disclaimer is that this is about the general information purpose I wanted to talk about. So Harit, we can probably go to the next slide. So friends, what I'll do is I'll probably take you through some of the slides. While I have a long presentation, I may not probably cover all the slides. I may focus on few slides which would give you a broader perspective of on what FinCare is, FinCare Small Finance Bank is, and then it will be followed by questions and answers. So I'll probably keep more time for the Q&A, and I'll quickly run through the presentation, focusing on key areas which would help you understand FinCare better. So as I mentioned, FinCare is a small finance bank. Small finance bank as a segment started after 2015. In 2015, RBI came out with new regulations for small finance bank. There were about 73 applications which were put in. We were also one of them. And at that point in time, RBI gave license to about 10 entities. Out of those 10 entities, 8 were NBFC MFIs, NBFC microfinance institutions who were running microfinance business at that point in time. And Disha Microfin was one of them, which got a banking license. We also did a name change thereon, and then it is now known as FinCare Small Finance Bank. So as an entity, we have close to about 14 to 15 years of history. The earlier 10 years or 9 years have been into pure microfinance business, and the last 6 years, we'll be completing 6 years on July 21st. So the last 6 years have been in the banking business. So that's a quick background about FinCare. Now, what is FinCare, or who are we? FinCare is having a very deep rural franchise. As I said, about 15 years of microfinance experience. As you know that India has got about 6 lakh villages, and we are present in about 57,000 villages. So we are almost covering 10%, and that can be viewed in two different ways. One is that we are only covering 10%, and the other way to look at it is to say that we are covering 10% villages, and there is an immense scope which is available. We primarily service or focus into the rural India, rural and semi-urban areas, and because of our products, which I'll talk about in a while, we have close to about 2.7 million, about 27 lakh rural saving accounts, and our 93.47% customers are rural customers. We have a pan-India presence. We are into 19 states and 3 union territories. It's a multi-channel approach, low-cost distribution. Not all branches, not all structures, not all banking outlets are traditional banking outlets. When I say traditional banking outlets, if you probably go to city and see a proper structure, that's metro structure, when it comes to us. And there are low cost formats as well. So we have about 1,231 banking outlets, which also includes the rural unbanked centers, which are close to about 350. So our own banking outlets or branches, if I have to probably use those words, like would be close to about 850. The other important point is that in the last 6 years period, 5.5 years period, we have been able to grow our deposit base granularly. We had 0 deposits when we started, because as an NBFC MFI, we were not allowed to take deposits. And as an SFB, one can do anything and everything which a universal bank can do, with, of course, probably 2 or 3 small differences. So we have been able to generate or create a pool of about 8,033 crore deposit base over the last 6 years period. Our CASA as of March have been about 33%. And our retail share of deposit is close to about 80%, to be precise, 79.79%. We are a digital first bank, focuses on technology. When we look at activities starting from sales to, or before sales even, when we think of sourcing the clients, onboarding them, servicing them, collecting money from them, and then the subsequent processes like audit. We use technology, we use applications across all journey points. Some of the application names are captured here: MCare, Delight, Smart Bank, FinCare 101, and I have a slide on the digital, so which I'll take you through. On the cashless disbursements, basically the entire dispersal happens cashless, and that straight away goes to the customer bank account. And digital has got variety of other things, and maybe I'll talk about it once I come to that particular slide. We also have a very strong investor profile and a very strong management team board, as well as a strong 14,800 employees, FinCareans, who support us or who sort of manages FinCare as a overall entity. From investments perspective, we have investments from True North, Leapfrog, Motilal Oswal, Tata Opportunity Fund, and there are various other entities who have investments into FinCare Small Finance Bank. We have a 21-member strong leadership team. The next executive management team, what we call, is about 50 members. And when you look at the overall team size at FinCare, we are a strong 14,808 people. And this number is as on March, and it is growing. We have a very strong track record of operational and financial performance. Last 3 years have been, to an extent, the performance have been lower because of COVID. But in spite of that, we have been profitable in all the 3 years, delivered an ROE of 8.6% in the previous financial year. In the phase when the industry was growing slowly, our dispersals have grown at a pace of about 37% CAGR in the last 3 years period. Our non-MFI portfolio, we have 2 set of products. One is secured, the other is unsecured products. And there is also a slide which I'll take you through. Our non-microfinance portfolio, which is the secured portfolio, is close to about 39% as of March. And our deposits grew at about 22.9%. Profitability I talked about. So some more granular details. As I said, that we are into 19 states and 3 union territories. We are almost there in all the states. Our predominantly focus is on western and southern geographies. So Gujarat, MP, Rajasthan, Karnataka, Tamil Nadu, AP, Telangana. These are the places where probably we would have about 70-75% of business, so probably slightly more into these states. However, our highest concentration in any state is not more than 18%. So we are that way well diversified, across country. We are servicing or present into about 338 districts and about 57,000 villages, where we are present. On the right-hand side, when you look at the bank branches, 858 our own format, and the URC outlets that I was referring to are about 373. And when you look at it, semi-urban and rural are about 613 total units. And while we'll have branches into semi-urban areas, we predominantly service clients into the rural area. So, and that's where, I said that our 93% clients at FinCare are from rural India. A slide on the products that we offer. On the asset products, we have microloans, which is our core product, where we have about 60% overall business is under microloans or the microfinance business. Loan against property and affordable housing are the products under mortgages. Again, a very granular business. Average ticket size of affordable housing would be about 10-11 lakhs. Loan against property would be about 6 to 8 lakhs. So a very granularly built portfolio. And the fourth one is on loan against gold, which is close to about 850 to 900 crore portfolio. We also have institutional finance, which is loans given to other NBFCs and NBFC MFIs, but it's a very small 2% portfolio on the overall book. And there are some of the other loans in terms of two-wheeler, supply chain funding, staff loans, and other loans on the asset side. On the deposit side, we provide all the products which and that would cover deposits, recurring deposits, saving accounts, current accounts. And also on a fee-based side, we are providing services on lockers, debit cards, a full stack of payments, AEPS, other enabled payment services, or for that matter, QR code-based services, and the insurance services, be it life, general, or health. So that's on the fee-based side. The point to note here, which are some of the bullets, rural customers about 93%, 39% business is secured. Cost income ratio 66, it has slightly gone up in the last 1.5 year period because of the additional investment that we have made in the previous year. In fact, we have added close to about 160 odd branches in the previous year, and now those branches, we'll be using those branches structure to grow further. So some of the investments have been made early. Collections team was set up. A dedicated team was set up to manage COVID impacted portfolio, and that's where it has slightly elevated. On the deposit side, we are providing banking services or the deposit product services to all our customers. We have about 42 lakh customers, and a number of clients perspective, that is number of clients. Deposit base is strong. Retail participation is strong. About 79.79% is the retail share of deposit. CASA is about 33%. And the last point on the deposit side is about cost of deposit. A blended cost of deposit is about 6.86%. And the cost of funds would be close to about 6.9% for the previous financial year. On the other income side, it's close to about 17.2% as part of the operating income as a percentage. So these are the products that we offer. I've covered this in the earlier slide, but to give you some more information, the message on this slide is that while we are offering these products, and since we are more into the rural and semi-urban areas, the typical yield one would see, it would be slightly better here. Microfinance, which is on the right-hand side on the slide, about 6,044 crore portfolio, 61%, and the yield is about 21.78%. And on the left-hand side, when you look at loan against property, 1,565 crore of portfolio with a yield of 17.5. Affordable housing is at a yield of about 12.8. Gold loan is 857 crore portfolio with a yield of about 15.3. And the institutional finance, as I was saying, that is only probably a 2% or less than 2% of our portfolio, is at 175 crore and with a yield of about 11.6%. So that's the breakup of the asset products that we are offering. A slide on the digital side, and as I was saying earlier, that when you look at the journey of clients from sourcing to onboarding to servicing to collections, we use technology at all places. All our asset products, sourcing, those are employee assisted applications that we are using. Some of the names, and if I have to probably spend 2 minutes on this slide, FinCare 101 is a digital saving account product. It is the start to end, starting from customer clicking on that particular link to opening an account. It is all automated, all digital services. And the last part is about converting half KYC into full KYC. So that also is being done through a video KYC process. So end-to-end digital process through which the accounts can be opened up. We have close to about 200 crore plus deposits which are there on FinCare 101, and we have been offering this product or a digital saving accounts product for the last 2.5 years period, or probably more than that. Smart Bank is again a name given to an application that we use internally for retail banking products and services. It's a instant paperless and tab-based application where accounts can be opened up instantly. Cash deposition and withdrawal are also happening through that particular application. The customer journey is very, very smooth on that app. MCare and MServe are the apps which are used for microfinance, microloans as a product. So one is for the origination, and it's a real-time identity verification, a quicker credit decision. The entire process or the workflow is integrated, connected with credit bureaus. There is hardly any manual intervention for onboarding the client there. And the other application, which is the subsequent part, MServe, which is for collections and servicing the client. So these are the two applications which we are using for microfinance business. As I said earlier, that these are all automated processes. Data analytics is strong, we believe, and we have a very strong in-house team. Now, one differentiator which FinCare has got compared to other players is that we have an in-house team. And barring the core banking, which is where we are using FIS as a technology, most of the applications, the changes are being done in-house. So unlike an person or an entity which is dependent on a third party, and if you want to make any change, you have to go to the vendor, talk to them, negotiate on the cost, agree on the timelines. Wherein for us, because of the in-house team, once it is decided that so-and-so changes to be done, we can turn it around in 24 hours, 48 hours, and maybe even faster, right? So depending on the change, we can make those changes and we can upload or make those changes in the production as well. So that's the strength that we have because of the in-house team. The other applications, Delight, FinCare Biz, are again on the asset side. So Delight is used for loan against property, affordable housing, and two-wheeler loans origination. These are again 100% tablet-based sourcing. FinCare Biz is again an end-to-end digital enrollment process. We can onboard merchant through QR code with Soundbox, using this particular application. And the last one is cross-sell application, which is used for instant lead generation. We probably would have more than, I guess, 20,000 plus connectors, who are enrolled on this application, and they provide leads, especially on the mortgages business. And you can imagine, when you have a 20,000 plus connectors, providing you leads, the cost of lead is very, very minuscule, and that helps us deliver a better ROI and ROE on the secured side. So that's on the digital side. Harit, go forward.
Sir, I am very curious to this slide because you have explained in very detail about the digital process, but I need to understand from the investor's perspective, I'll have to look forward to. Most of your client segment is a retail micro loan segment customers. Are they digital savvy, or it is mostly assisted support given by the employees of FinCare to do this?
Interesting question, Harit. So I'll probably answer it from different products perspective, right? And we offer
maybe a little brief only, but just for the curiosity's sake, yes.
Sure. So on the microfinance, what we have seen is the digital literacy is going up compared to what was there about, say, 8 to 10 years back, and the current literacy. So clients are more educated compared to their previous state. Those applications are mainly employee assisted. So the MCare and MServe applications which I was referring to, those are mainly customer or the employee assisted. When we look at the other products, when you look at, for example, 101, right? Now customers come on board, they themselves click on a link, and then the entire process is automated. So there is no employee intervention into that process. The cross-sell application, which I talked about, connectors connect on their own, and there is no employee involvement in terms of giving any assistance like to them. When it comes to Delight and other applications, it's a combination. So some of those things can be done by customers directly, and some of those activities can be done by employees, getting the information, capturing base KYC details, and then triggering the processes of credit bureau check and other steps. So it's a combination.
So thank you, sir, for the clarification. I'll move forward.
Sure. And Harit, I didn't ask you earlier, on the previous slides, and we can probably take Q&A later on also. But if there is any question, please stop me so that I can answer.
Sure, definitely.
Yeah. So I think broadly I've covered the important slides, and maybe to summarize, and give a number or flavor on FY23. And since some of you may not be probably very familiar with FinCare, I think this one slide would give you an overall flavor for FY23 numbers. Balance sheet size is about 12,467 crore. Gross loan portfolio is about 9,911 crore. Secured mix is 39%. Deposit is close to about 8,000 crore. CASA as of March is about 33. Retail share of deposit in overall deposit mix of 8,000 is about 79%, 79.79. ROE is about 0.94 and about 8.6. Capital adequacy is strong at 20%. GNP is about 3.25 and NNP is about 1.3. I think this would give a flavor on the overall numbers. I have some subsequent slides which would probably give you a 3-year story, and I'll quickly take you through on those slides. I think the broader message here is that over the last 3 years, when COVID was hit and when the industry grew at a very, very snail pace, we have been able to grow our business nicely. So for example, as a banking structure, the deposits grew at a level of say 9%, and the credit grew at a level of about 13 to 15%. As against that, when we look at our own advances and growth over the last 3 years has been about 27% on the advances side, and on the overall assets, we saw a CAGR of about 25%. On the dispersal, we had dispersed close to about 8,817 crore. I think that is close to about 37% CAGR when you have to compare numbers between FY21 to FY23. So that's on the overall dispersal. Branches I talked about earlier. Number of banking outlets, what we have is about 1,231. And the number of employees, as you can see, between FY22 and 23, when there was a slower growth, we have been investing into number of branches, having our structure appropriate structure so that we can utilize it when the markets are good. And with that, we had about 14,804 employees as of March 23. Some of the other numbers, deposit grew at about 23% CAGR over the last 3 years period. On an absolute number, it has gone up from 5,318 crore to about 8,000 crore in the last 2 years period. The granular deposit have been more than 80%. It was at about 90% or 91% at FY21. But I would say that if it is at around 80, I think that is the level that we are looking at, and that's a very stable, strong, granular base to have. CASA absolute numbers have been going up from 1,263 crore CASA. In fact, a year prior, it was about 11% CASA. So it has gone up from 11% to 23% to about 36 and about 33 in 4-year period.
Quick question.
Yeah.
A very generic question for that audience to understand why that CASA, improvement of CASA is very much required. How it helps the bank in terms of overall reducing the cost of borrowing.
So you asked the question, and I think the answer was also there in that question.
Yes.
CASA helps the bank to reduce cost of funds. As you're aware that on the current account, there is no interest rate that the bank is offering. On the saving accounts, banks are offering, when you look at banking system as in general, between 3.5% to about 7%, 7.5%. So that's the rate which is offered, and that too on a different bucket. So when you look at blended CASA, the cost is much lower than the term deposits. So that is one advantage, and which helps the bank to reduce cost of funds. The other one is that CASA is more stable money in a sense. When you have a CASA, typically, you'll see a deposit inflow and outflow, but on a CASA, you'll not see many differences. If you are at a particular level, unless something very different, you'll probably see the absolute numbers on a state basis. So it gives you more stability, right, and more granular business. And third, obviously, that CASA also when you are servicing clients, CASA typically is more of a retail clients, and when you service retail clients, you can offer different products also to them. For example, if I give an example of say microfinance business, because we are offering microfinance loan to a rural customer, we are able to offer them insurance services. Now we provide insurance for member, we provide insurance for spouse. They are also opening up saving account with us. We provide them debit card. They also open up recurring deposit. So our average products per microfinance client is close to about 4.5 for a JLG loan customer. So similarly, that also creates an opportunity when you have a stronger CASA base, when you have a larger customer base, you can think of offering various products to them. And that's not related to, and it would basically go into the universe of liabilities, assets, and fee-based products. That's what you'll be able to offer to them.
Thank you, sir. So basically, if I could summarize, better the CASA numbers, better the health of the bank.
Absolutely.
Thank you. I'll move to the next slide.
Yeah. So I think some of the other numbers, total income is about close to about 2,000 crore for the financial year. It was 1970. Net interest income has been growing, and one of the other difference which you'll find in SFBs is the NIM would be stronger. Now a universal bank will not only see net interest margins, you'll see between say 2.5%, 3% to 4%, or maybe 4.5%. But for small finance bank, because we are dealing with a different set of clients and our models are different, the NIMs are strong. The net interest margin, which is the total interest that you charge minus the financial cost, is strong at about 10% plus. And that creates a cushion, in terms of if at all there is, for example, there is any credit loss, incremental credit loss because of the COVID kind of a situation, this NIM helps us mitigate that. And this is also reflecting into the PAT, that in spite of taking good amount of write-off and the COVID losses, the PAT has been positive throughout, in the last 3 years period. So that the message is that the NIM helps, the stronger the NIM, better the ability of the bank to absorb the loss, absorb the shocks. Cost income ratio, as I said, that we have been investing over the last 2 years period, due to which it has gone up. I guess now the efficiencies would kick in, and we'll probably see some improvements going forward on that part. The other important point here, on the right hand side chart on the cost of funds, and while RBI has increased the repo rate, the overall rates in the market have gone up. Our effective cost has come down from 7.37% in FY22 to about in FY23. And that's because we have been focusing on long-term deposits. So when you focus on long-term deposit, while the newer deposit would come at a slightly higher cost, but you don't have to sort of give a very, very high cost of funds. And if you have a stronger CASA, which would effectively bring your cost of deposit down, the blended benefit one would see. So that is one point to note. On the left hand side, the bottom GNPA and NNPA, those were slightly elevated in the COVID phase, but it has come down and under very much control. As of March 23, our GNPA was about 3.25%, and the net NNPA, the net NPA number was about 1.3%. And PPOP, pre-provisioning operating profit, was more than about 440 odd crore, 443 crore in FY23, which is a strong 5% of gross loan portfolio. So once the COVID losses are coming down, and once the loan loss provision comes down, bank would be poised for a better profitability, because the PPOP, the pre-provisioning operating profits are very, very strong.
front of NPA, GNPA and NPA, what is the target which the bank looks forward to, or what is the comfortable area where you feel like this is the comfort within which you can work on?
So maybe I can give the number of, say, FY, maybe 18 and 19 prior to the COVID, and our GNPA numbers at that point in time were in the range of about 1.3%, and our NNPA number, was about 0.5%, right? So if you are, if there are no shocks, if there are no pains, that in the pre-COVID era, it would have been about 1.5 to about 0.5%. However, with COVID, because of the shift or slight change, the numbers may be a bit higher going forward, not for us, but as an industry as a whole.
Okay, thank you, sir.
So I think the last probably couple of slides, net worth is close to about 1,234 crore, ROE that we have talked about earlier. So maybe we can skip this. I think I'll quickly glance through. I mean, broadly, the message is that we have a very strong, board of directors team and the management team. One point, to note is that for a bank, it is majority independent directors. So the faces that you see and the names that you see at the bottom are all independent directors, having anywhere between 15-20 years to about 30-35 years of experience ranging into some of the larger banks, with RBI, on a law background, running businesses. And those are the independent directors that we have. Mr. Baijal, Mr. Gulati, Mr. Aral Prasad, Ms. Nanda Dave, Aarti, and Mr. Narayanan. And on the top, there are the nominee directors and the chairman, which is Mr. Pramod Kabra. And there are 3 nominee directors on the right-hand side. Rajiv is with the FINCARE platform for the last 11 years now, and he's the managing director. So that's on the board of directors. Senior management team, we have a very strong team. I think one of the other message here is that some of the members, when you look at it, they have been with FINCARE for a very long period. So Soham Shukla, for example, is one of the co-founder of Disha and has been with platform for a longer period. Rajiv has been there with the platform for about 10 years. Pankaj has been there with the platform for about 10 years. And some of the other names, when you look at it, liability head has been with us for the last 6 years period. The mortgages leader is with us for the last 5 years period. So, we've been lucky to have a team which has been with us in thick and thin over the last 5 to 10 years period. On the KMP, Rajiv is the MD CEO. I take care of finances as the Chief Financial Officer. And Shefali is the Company Secretary, who has also been with us for the last 7 years period. So that's on the KMP. I think the last slide on the awards, I guess we probably would have got close to about 23 awards, ranging from best place to work to having the best, the audit management system or the mortgages business application, digital solution award. There are a few others. So there are close to about 23 awards that we would have got in FY23, and it reflects what good bank is doing.
Now, the most important thing why all the audience has come today is to understand the new issuance of bond which is available for them to subscribe. Now, this issue has recently been done. So now the issue is available for investors to invest into. It will be available in the secondary market. Sir, if you could just rush through the basic highlighted points of this bond. The credit rating, the bond details, it will be more than helpful for the investors to understand. And then we can move for the Q&A.
So I guess that is for the information for the larger public, but these are rated, listed, unsecured, and redeemable. The tier 2 bonds, and these are rated by CARE and ICRA. There are dual rated. CARE is in rating A with a stable outlook, and ICRA is rating A with a positive outlook. Face value and other things, I'm sure you'll be able to probably see that on the screen, is basically 5.5 years NCDs, and these are unsecured in nature, and unsecured because banks as a regulation or SFBs as a regulator, regulation wise, banks cannot issue bonds which are secure. So the tier 2 bonds, like by nature, have to be unsecured. There's the underlying, nature of bonds. Debenture trustee is catalyst, and registrar and transfer agent is KFA.
Thank you, sir. And just for the audience information, even when bank raise FDs are also unsecured in nature. So banks do not raise funds in the format of a secured product. So they are unsecured in nature. Now, these bonds are available on IndiaBonds platform. If you want to interested in investments, you can log on to IndiaBonds website and look forward to it.